The Indian consumer is highly price sensitive. As a result, when sentiment is low, consumers tend not to spend at all. So what kind of out-of-the-box thinking can change this scenario? And are consumer companies using this slowdown to do that thinking? Marico's offices are in Mumbai. Hi, Mr. Mariwala, how are you doing?
Hi, how are you?
With factories across Kerala, Goa and Himachal. Harsh Mariwala resisted a takeover from HUL to grow this firm beyond a small family business. And today, they're among the largest producers of edible oil and personal products. Marico is using this slowdown by exploring acquisitions in global markets, growing its foods portfolio, and investing in innovation and research when the chips are down for the economy.
We have to look at what cuts ice with the consumer, either in order to increase market share or to increase market size.
Do slowdowns make for better periods for you to do higher research for new products?
No, I think slowdown, in a way, it makes you introspect much more, and you are far more agile as an organization. There is some degree of concern that if growth doesn't happen, what will happen to the organization. So you are far more sensitive to issues like innovation, pricing, growth in a slowdown, and including your costs.
So, that's the point. So, from a corporate point of view, the costs are very important. Yeah. But from a customer's point of view, the price sensitivity, I'm imagining, goes up even more during a slowdown. How do you deal with that?
Yeah, I agree that the sensitivity is much higher in a slowdown because within the same budget, partly because of higher inflation, the household has to manage purchases in a smaller basket. And I think the key challenge to us as FMCG companies is to offer products at the right price point at one level, products which are innovative by giving some packages rather than just giving standalone products. The growth has been there in spite of high inflation, and we have seen growth coming in for urban areas as well as from rural areas, and higher growth from rural areas. And I think one key reflection of this growth is, one can say that the wealth has percolated down to the poorer sections of the society, mainly those staying in rural areas.
Okay. That's a very interesting point. So you're saying that the demand is strong largely because the contribution of rural areas has helped you become less and less exposed to a slowdown?
Yes, because the growth rate in rural area has been far more robust compared to urban areas. Urban areas also are growing, but rural areas are growing at a faster rate. Clearly,
there's an increasing size of the rural market, and the urban market automatically calls these essential goods. So where do you see yourself focusing, and what kind of expansion are we looking at?
I think challenge is to be far more aspirational as far as growth is concerned at one level, and hope and wish that the overall slowdown in the economy, which is hitting many sectors including durables, will not percolate to our FMCG sector.
So let's talk about the margin making capabilities of the future. Would they be sort of dependent on increasing value added services in your portfolio, or would it be a volume game primarily, which would then mean lower margins?
No, I don't think we are looking at a situation where there will be lower margins. Our growth strategy is based on organic growth of our existing brands, also launching new brands, increasing market share where we are weaker players, and increasing market size where we are brand leaders or category leaders.
The concept of down trading, wherein customers move to cheaper or possibly even lower brands during a slowdown. What is the status on that in today's crisis situation?
For us, most categories we are present in, we are market leaders. So, to answer your question, very limited impact, very marginal impact. In some cases, there could be impact, but it has not impacted our overall growth rates.
Every time there's a percentage or two drop in the input cost of oil, how does that change margins and an approach to pricing?
Anywhere between 1% would mean improved margins by around say 0.25% to 0.5%, depending on depending on the brand.
Okay.
And depending on within a brand also, we may have various extensions. So each extension may have a different cost structure.
Okay. What do you think will be the 3 game-changing initiatives in consumer goods business ahead? What could either catapult the sector to the next big phase or seek some assistance from the government in order to build on its strengths?
See, I think the biggest game changer would be the GST introduction, which is pending for last few years.
Yes.
Number 2 is the FDI in retail, which again is a big game changer in terms of the overall retail environment. It cuts size both ways depending on how you are placed in the market, whether are you a market leader, are you a weak player, to what extent are you vulnerable to private label competition. So I think that would be the second game changer. And the third game changer is overall how the economy does. And because penetration level of many of the products or categories of products in India is very, very low, especially in skincare, in breakfast foods. And if the overall wealth percolates to rural areas, we can see much higher usage for these categories and much higher growth rates. So I think overall economy and benefits of economy percolating to the rural masses will also increase the penetration levels for the products or the sectors where the penetration level is low.
Okay, thank you very much, sir.
Thank you.
Thanks.